Boosting cash flow. Now, this is the big one, I think, for people that have employees. And this is for businesses that have a turnover less than $50 million. And this is going to be automatic when you do your normal lodgements with PAYG and withholding tax. So maybe Brian can explain a bit about how this works.
Yeah, so they've set this up in a bit of a tricky way, but essentially, if you employ people, even if you don't have to withhold tax, you'll get a minimum payment of $10,000 this year and a minimum payment of $10,000 next year.
So how will they know if you employ people but don't withhold tax?
Because you'll be lodging your PAYG summaries at the end of June. Probably also paying super on some of them, and they see that.
Yep.
They see that through their system they've got. So they've split the payments into two sections, and the idea of that is they want you to continue your business ongoing. So half of the payment is in the current financial year and half the payment is in the next financial year. So as I said, the minimum payment is $10,000 this year, $10,000 next year. The maximum is $50,000 this year and $50,000 next year.
That's financial year, by the way. So 30th of June.
Financial year.
Accountants talk in financial year. The rest of the population use Christmas as a gauge, Brian, just so you know.
Well, it's no good. We get 2 New Year's Eve parties every year. So
I love it.
So the way it works, and it is a little bit convoluted, but if you're a quarterly lodger, when you lodge your March BAS, you'll get essentially a credit on your BAS equal to whatever tax withholding there is on the wages reported in that BAS. Then in the June BAS, you lodge your BAS, you'll get a credit equal to the PAYG withholding that's been declared in the BAS up to that $50,000 limit. And then you'll also get another credit equal to half of the credits you received for the March and June BASs. When you lodge your September BAS, you'll get a further credit equal to half of the credits received in the March and June BASs. So essentially 4 payments, but 2 done at about the same time when you lodge the June BAS. If you're a monthly lodger, when you lodge the March BAS, you'll get 3 times whatever the PAYG withholding is in the March BAS. So for most of you, that'll mean that you'll probably get a refund coming back to you because that'll be more than what the GST payable is. And then April, May, June, you'll get a credit equal to the tax withholding in those lodgements, again up to that $50,000 cap. In the June BAS, you'll get a quarter of what you claimed March, April, May, June, and that quarter will be received again in July, August and September.
Okay. So question coming through, if you have a current ATO debt, that credit, will they apply that to the current debt or will they still refund it?
I expect they're going to apply it to the current debt.
Yeah, I would agree with that. Absolutely. That's typically what they would do. Any other questions about that? This is probably the most beneficial. So Karen has asked, we are an association. Does it apply to us?
If you're paying employees, yes, it will. Also, keep in mind that there is an integrity measure in the legislation. So you need to have been registered as an employer from before the 12th of March. And for those of you who have other companies floating around, you can't now go and start paying wages out of those companies in order to get this payment. I don't know how active the ATO is going to be in auditing this, but part of the legislation is that anything you do in order to get these payments, if it's solely to get these payments, then it's not valid and you're not entitled to it. So I expect once the ATO catches up with trying to sort out payment plans for everybody, they'll probably turn their attention to auditing anything that looks unusual, which would be companies that have been around for a long time, never paid wages, and all of a sudden they're paying big amounts of wages and things like that.
No doubt they will. A question, do directors' fees count?
Yes, they should count.
Okay. So I did have another question from a client who has not managed to get on here, but I'm going to ask you anyway. They had a higher PAYG in the previous month because they had people going on leave and they're paying leave loading. So they felt like it was a disadvantage because they're on monthly. Is there like, do they use an average of the months or are they just going to use what they pay in March?
They're just going to use what they pay in March.
Okay.
So whatever whatever's their March times three.
Mm. And so that's what they can expect to be paid. So if you paid $8,000 normally in March, or that's what your withholding tax was, are they expecting people to pay it and then get the refund, or are they just going to report it and then they'll credit them with the money, the refund, and then the balance?
So this starts from the 28th of April. So if you lodge your BAS next week, you'll have the debt sitting there and they'll expect payment. But given that you don't need to pay until the 28th of April, I'd say if you lodge your BAS early, just pay the GST and don't worry about paying the PAYG withholding. The credit will appear there on the 28th, assuming the ATO systems can cope with this, which they probably can't, but it'll appear there at some point.
Yeah. More questions coming through about trusts, Brian. What is your understanding for businesses that are trusts and don't pay themselves wages? Should they register for wages as from, say, 23rd of March to satisfy the package?
I would say that it's worth doing it. I can't guarantee that there won't be an audit later on. The ATO won't try to argue that you're only doing it in order to get the payment, because at the end of the day, the trust distribution is your wage and you do have to pay workers' comp on it. So I think it's very arguable that it is a wage and that you are entitled to getting it. So yeah, I'd look at doing that.
I'd agree with that. I mean, if that's how you get your wage, because and even if it gets distributed out of your trust, there's no doubt you're paying PAYG on it as well.
You're paying tax on it at some point. So just be aware that that's getting towards the fringe of the law. Not saying that you won't get away with it, but if there's an audit, there might be a bit of backwards and forth with the ATO to get that one sorted out.
Yeah, because it's not 100% clear, is it? So it's probably,
No, and that's the problem with all these announcements they're making, Ben. They're making policy on the run, understandably so, but the finer details of it aren't quite as clear as they could be.
Yeah. Now, we've got a couple of questions about sole traders, if they're going to go onto the Centrelink, and they're wondering how their partners' salary might affect them being able to claim these benefits. Do you know anything about that?
I'm aware that the earnings of the partners, the assessment on that has been reduced, so it doesn't take into account as much of your partner's earnings, but it will still take into account some of the earnings. So it's best to jump on the Centrelink website and get some clarity around that.